Jane, look at the market action declines across the board in Europe, in Asia, in the U.S. What's going on?
Well, I think the European markets and, of course, the US are reacting to the news that Asian markets reacted yesterday, and that is an intensification of concerns about European debt. And I think the most important thing going on in Europe is not just Greece, it's the fact that countries which were hitherto somewhat seen as protected are now starting to be affected, notably Spain with the election results on the weekend, Italy being put on credit watch, and also Belgium. So there was thought to be a firewall from those smaller peripheral countries like Greece, Portugal and Ireland, protecting Spain and Italy particularly, and there's now a question mark as to whether that firewall is holding. So all of those things, I think, have come together at a time when the worry list is very, very long. We've got the end of QE2 next month in the US. US housing situation in the US is still very tenuous. A round of weak US data recently. Business conditions indicators, the so-called PMIs worldwide, seem to be slowing down. We saw China yesterday, Europe overnight. So all of these things, I think, are just weighing on markets, and they're all coming to a head. And of course it is that sell and May go away. So I think we probably are in for a couple of rough months in share markets.
Oh, a couple of rough months? So this is just a short-term blip, but this is not when the window shades come down?
Well, it could well be, but my inclination is that it's just another correction. It's got a lot of similarities, I must admit, to last year when the ISM and other indicators topped out. We had the first round of European debt problems, and then, of course, share markets fell quite sharply into late June, July, and didn't really start to pull out again until we came through into late August, September. So I think it could go on for a few more months yet. The other comparison with last year, of course, we've now got volcanic ash coming out of Iceland to contend with. So it does very much seem like deja vu all over again. But the reality is globally that we've still got very low interest rates. The US labour market, I think, is improving, and ultimately I think that will see the recovery continue globally, but it's going to be a very rough and fragile recovery, and that makes for rough and volatile share markets.
Yeah, okay, so what does that mean? This is a buying opportunity then? Where do you go to buy?
Well, I think it ultimately will provide a buying opportunity, just as the growth scare last year did. But at this stage, it's probably a bit too early to jump in. Right now, I think buying would be like trying to catch a falling knife, because it could well be the case that we might see further falls in markets going forward.